Hey, what's up everybody? In this video, I'm going to show you the accounting behind what happens when you write a check in QuickBooks, okay? So I know QuickBooks makes everything super easy, but there is actual accounting that's happening behind the scenes that you don't ever see, and a lot of times it can be wrong and you can really have messed up financial statements. So I want to just show you the basic accounting that happens behind the scenes when you write a check. So you go into QuickBooks, you click write a check or expense or whatever it's called up there in the menu. There's a couple of different options and you choose the bank account, you type in the amount, the date, $1,000, and then you choose an expense category, okay? That's really a general ledger account which comes into play on your income statement and your balance sheet because your general ledger account is your chart of accounts, which is the framework or the skeleton of your financial statements, both balance sheet and income statement. So how you have those chart of accounts categorized, which one you select when you write that check, all of that matters in order to have accurate financial statements. The other thing that you can actually do in QuickBooks is you can set up items. So if you're selling things or purchasing things, you might have an item set up, such as t-shirt, but that t-shirt item has to be linked to a chart of account, which is going to tie it to your financial statements. So another thing that could happen is when an item is set up, it could be linked to an incorrect type of account, or an item could be selected in a transaction when it shouldn't have been and messes up your financial statements. Again, maybe a different video for a different day, but today I want to show you just simply what happens in QuickBooks when you write a check. So in QuickBooks, you're going to write a check. You're going to, again, choose write a check, put in the date, put in the amount of $1,000, and you're going to choose, let's say $1,000, you choose advertising. All right, so advertising is what you selected. Well, you just saw that check, you selected advertising. Well, everything in accounting is double entry. So what you really did was you selected the two accounts that the journal entry is going to affect. The journal entry is going to affect cash, your cash in bank, your bank account, because that's what was chosen by default when you went in to write a check. Your bank account was chosen by default. If you have multiple bank accounts, you had to choose which one you were going to use to write this check. That's one side of the transaction. So the journal entry is going to have cash in bank, and it's going to hit that account for $1,000 because you wrote a check and spent that money. So that $1,000 is going to reduce your cash in bank because you spent money. You wrote a check. Everyone understands that piece of it. But this transaction has to balance. Well, that's when you selected advertising. You selected advertising, and the other side of this journal entry to balance it out. Now, I have a video that talks about the basics here of the financial statements, basics of accounting, but double entry accounting means everything has to balance out, has to equal. So the other side of this transaction is the $1,000 for advertising. That's going to go over on your income statement. You're going to increase your expenses by $1,000. So now your income statement is going to be $6,000 minus $2,000 of expenses equals $4,000. And that's the transaction that happened when you wrote a check. It reduced your cash by $1,000 and it increased your expenses by $1,000. That's the entry, the double accounting entry that was made when you wrote a check in QuickBooks. My name is Brad. I'm with Wooten CPA. My goal is to bring peace to your finance and tax responsibilities. Don't forget to subscribe to the channel. Please hit the like button and then the bell so that you're notified when new videos come out. Thanks for watching.